Welcome back, folks. In this video, I want to answer the question that many people ask, and that is, does ICT work with Bitcoin? Is Bitcoin also controlled by an algorithm? Now, in my view, yes, it is. Absolutely, Bitcoin is also controlled by the algorithm, and the same ICT principles that I use on all other markets, in my view, is also applicable to this market. Okay? Now, this is an invite for you to go study the charts. It's not an invite for you to risk real capital. Okay, this is not a trade recommendation. We're learning about price action in this channel. So the two questions I always ask myself to determine bias is, where have we come from and where are we going? And I always start from higher time frames. So you're looking at a monthly chart of Bitcoin. Where have we come from? That's the first question I ask myself. We have come from a discount, which is that fair value gap. Okay, and so where are we going? Well, the closest liquidity pool is that high there. Okay, so on a monthly chart, we are bullish. The other thing that we can see on this monthly chart is that with this most recent expansion in the last month, we have closed above that sequence of down candles, which is a bullish order block. Okay, so institutional order flow is bullish. If I draw a line at the open of that down candle, which is a bullish order block, we can see that in this current month, when we had that pullback, we have come into the open of that down candle, which is a bullish order block. That is a bullish order block because those two down candles, that sequence of down candles has come into discount, which is that monthly bullish fair value gap. Okay, so monthly time frame, we are bullish. We've come into a bullish order block on this monthly time frame. Order flow at the monthly time frame, which is a high time frame, is bullish. Okay, and we have a very clear draw on liquidity, which is, as I said, this is not a trade recommendation. I want you to monitor this chart over the next couple of weeks to see if ICT does in fact work in this market. We have a very clear draw on liquidity after expanding through with this previous monthly candle, expanding through that down candle or sequence of down candles, which is, as I said, our bullish order block, which will act as support. You can see in this current month when we had that pullback, we've come directly down into the open of that candle. Okay, now I want to see this fair value gap left open. Okay, so I want to see that to be a breakaway gap, because that'll indicate strength and momentum as we go through this liquidity pool. Okay, and the key is that we've come from, which is a very key question when you're looking at bias and trying to determine where the market's going. When you're trying to determine where a market is going, you need to ask that simple question: where is the market coming from? Where has the market come from? It's come from this discount price, which is this fair value gap. Okay, so let's now jump down to a weekly time frame and assess what's been going on the weekly time frame. Now, one thing that I'll say is that you should also watch my previous video on my channel, in which I did a similar study, like this one here, titled Easy Way to Find Secret Market Moves. In that video, I also covered a market and we looked at institutional order flow using the same concepts. So watch that video in combination with this current video so that you can learn exactly how to determine where a market is headed. And you'll see I've used the exact same concepts. Okay, so let's look at a couple of things. Where have we come from? We've come from this bullish fair value gap. Okay, notice that the market has engineered liquidity, right, just prior to going down. What do I mean the market has engineered liquidity? Well, when a market goes down, okay, let's look at this, for example, this price action here. When a market is about to go down, it takes out its closest high. Okay, you see that? It takes out its closest high on its left. That move up has taken out its high on the left. Okay, then it moves down. Now, often you'll find that the market engineers liquidity prior to it going down. So here, the market has also moved down and it's left this swing high intact. Okay, those are very close highs. Okay, and so it's done that so that on the way up, it can take that liquidity, because above that level is where resides buy stops. People who are short the market, okay, from there have their buy stops above that level in the market and needs liquidity as fuel to move up. Okay, so where has this market come from on this weekly chart? We've come from a bullish fair value gap. Where is the market going? Well, there's a few liquidity pools when we're down here. Okay, when we're down here and we're looking for a movement up, this is a liquidity pool. This is a liquidity pool, and these highs are a liquidity pool. Okay, so that's where we have come from. And more closer to the current price, we've also come from that fair value gap. And notice from there, we have closed above the open of that down candle, which is our bullish order block, because it has taken liquidity and come into this bullish fair value gap. So where have we come from? We have come from a bullish fair value gap, which is discount. Where are we headed? Well, liquidity now resides above that swing high, where anyone that's short this market have their buy stops residing above. Okay, so weekly is also bullish, and we can see that we've come from discount. Okay, and therefore we should be heading into premium. Okay, so now let's jump down to a daily time frame. Okay, now what we can see in the daily time frame is something very similar. Okay, we have come from, we've taken all this liquidity. Okay, whoops, let's actually grab a line instead of an arrow. So we've taken all this liquidity, all that, all the stops residing under those equal lows. Okay, from anyone that's long, right? They have their stops under that level. Okay, sell side liquidity, where this movement down has come to liquidate those positions and come into discount, which is that fair value gap on this daily time frame. Now, after doing that, what has the market done? Well, it's the same concept. See these sequence of down candles? Okay, that is our bullish order block. When does that come into effect? When we close above its open, right? Which we have done on this candle. You can see the next candle has come into that open of sequence of down candles, and therefore has come into a daily bullish order block. Why is those sequence of down candles a bullish order block? Because we've taken liquidity and come into a fair value gap. Okay, so I want to see that large fair value gap remain open. Okay, this one here. I want to see that to be the breakaway gap, and I want to see price continue repricing higher. And therefore, I'm expecting, again, this is not a trade recommendation, I want you to monitor this market to prove that these concepts taught to us by ICT also work in this crypto market. So in my view, the draw on liquidity is those highs. Okay, because anyone that's already short from those levels, okay, have their stops above that swing high. Okay, and also, so this would be minor, right? Minor buy side liquidity. Okay, and this level here at the top is major buy side liquidity. So there are buy stops remaining and residing above that swing high, and buy stops residing above that swing high. And therefore, if institutional order flow is bullish, as we have seen on the monthly chart, weekly chart, and this daily chart, we can see we've come from a discount. We should be headed to a premium, and that's further enforced by going through these sequence of down candles that took liquidity and came into a bullish fair value gap. Okay, we can see at the next candle where there has been accumulation, right? And so therefore, order flow is bullish, and in my view, based on what I see, we should be headed higher. Okay, again, this is not a trade recommendation. Monitor this market and watch how the algorithm delivers price to that liquidity pool residing at these highs. Okay, hope the video is useful. Go back and watch the other video that I've also referenced in this video so that you can combine both lessons, because it is a topic where you want to see lots and lots of different examples. I will now talk with you in a future video.